Hello, guys. Welcome back to UCR Forest Academy. Once again, you are welcome back to UCR Forest channel here on YouTube. In today's lesson, we show you guys a particular POI or a particular kind of POI you should never be marking on the chart. You should never even place your order in that very particular words POI, because the moment you start making use of that POI, if already you're already making use of it, you're already setting yourself up for failure, and there is no doubt you are definitely going to lose that setup. Sometimes it might go in your favor, but you just need to know that with this in the long run, you will never be profitable. A lot of things I'll be breaking down on today's lesson, not only showing you guys this particular POI, but even I will show you guys how this POI intend to form very early. And if you want to make use of it, there's how you're going to make use of it. Okay. And also I will show you the disadvantages of that very particular POI. That does not mean that the market doesn't weak me out with my strategy. My strategy is not 100% profitable, but it will always fetch you good returns. Okay. There are a lot of things that we explain, like you're going to understand the difference between this POI and clear of liquidity, because most people actually say that this POI and clear of liquidity are all the same. They are not the same. Calm down. They are not the same. I will show you. Okay. And then you understand the difference between this POI and order flow. You see, when you understand the difference between this POI and order flow, you will be able to give and inform decisions of the market, and you make something good out of the market. Okay. I will help you guys to understand the criteria of a valid POI. There's a lot of things I'm going to show you guys on today's lesson. So if you're coming across my channel for the very first time, or you are watching this channel, or you're watching a particular lesson and you have not subscribed yet, I don't know why you have not subscribed. Turn on your notification button, number one, so that you always be notified by YouTube each time I drop a quality lesson like this. Also, make sure you subscribe to the YouTube channel, and please, I'm begging you, share the lesson if you actually found it a particular lesson profitable. Okay, don't forget our VIP class program is still running. All you have to do is to use the number on the screen and reach out to us on WhatsApp to get the details of how to be part of our academy. This is the only online academy where they are going to mentor you private. What I mean by private, we are going to mentor you privately. That is the way we do for each and every one of our students. Nobody is calling you on Zoom call. We have a strategic way how we teach each and every one of our students, and they learn in different cycle. This one can be on introduction to forex today. The other one can be in an advanced SMC advanced lesson or whatever. Or the other one can be in risk management. Everybody learn in their own pace. We have enough staff to be able to take care of that. So all you have to do is to make sure you use the number on the screen and reach out to us, get the more details of how we operate, and then you will definitely see, or you just try us, and then you will never regret it. All right, so let's start the lesson right away to see exactly this type of POI, or to understand what the lesson is all about. Use the link on the description below. Join the free Telegram community. Every week we drop free signals there. You can go and check it out. We drop free signals here every week. I'm very open guy. I'm not like the person that will lose and then I will not post it. Everything is here. Everything is here. So just use the link and join. Okay, I drop 3 to 4 signals every week. So let's begin. So now when we talk about this type of POI, we need to understand how to mark out point of interest, number one. Then from that, we will now understand this type of POI and how it is seen. So I believe by now, if you don't know how to mark out point of interest, the foundation of marking out point of interest is actually on this my YouTube lesson called Market Structure VIP lesson. If you are new to my channel, or you go and watch this very particular lesson, after this lesson, just come to this very particular playlist, open this thing and watch it to the end. You are not going to remain the same. This is a VIP lesson that is there, but you don't even know. You are not going to remain the same. You will definitely understand something, though everything is not really disclosed here, but it will definitely help you. Okay, so now let's proceed. So when marking out POI, we have to understand that POI at the last opposite candle. That is to say, if the market was selling like this, let's say that this is a series of red candles dropping like this, dropping like this. Let's say that these things are red candle. Let me color it. Do all these things waste time? All these things waste time, but for the sake of those people that might be thinking, but this thing is green candle, let me just try to color so that everything will look very simple to understand. Okay, so let's say that this is a bearish candles dropping, and this was the highest high this bearish candle formed. And the next thing we had is some sorry about this thing. The next thing we had some green candles that started forming, some green candles. I'm going to show you guys that very soon. So let's try to keep it very well. So now, and then green candles started forming like this. See, watch the lesson to the end. You don't conclude he knows what I want to teach you. At the end of the whole day, you form that habit of start skipping. That is now where your number one failure will start. And please do not mention my name anywhere that I was the one that taught you what we are doing, because you never kept the rule. That's number one thing. Watch the lesson to the end. It will not cost you anything. Okay, so now you see that these are bearish candles dropping. The next thing you spotted is bullish candles. I'm coming to color it now. Started forming like this. The next thing, these candles were able to break a structure to the upside. So regardless of the color of the candle, actually. So now let's restore this thing to green, and then so these are like green candles actually the market produced. And then the next thing, price now pushed aggressively and now broke a structure. So if somebody was to ask you, where is a point of interest here? Simple. A point of interest is the last candle. Is the what? Is the last candle that actually produced the impulsive move. Or let's just say the last opposite candle. Don't mind all these statements. The last opposite candle that led to a POS. Finish. Just the last candle. That place the market reverse from the U-turn like this. And that place the market reverse from the U-turn. That very particular place that the market reverse that looked like a V. How do I just make you understand this thing? That very particular place the market reverse from, that is where you have to start looking for a point of interest. So the moment you look out for that very particular candle and you spotted that that candle is this, because as you can see, this was actually the last candle the market formed. This was the last candle the market formed before this massive green candles form and broke a structure. So this is a point of interest. And for you to mark that very particular candle, it needs to break a structure. It needs to what? Break a structure. Though we have different types of point of interest, like we have a range created point of interest and we have a one single candle point of interest. Have you ever want to mark out a point of interest only for you to start marking it out? You realize that for you to mark out these things now, that there are a series of candles there. Let's say in this scenario now, there are other candles here like this. There are other candles like a checkmate of candles around that zone, like small candles around that zone. So you are struggling to mark which one is the last candle. Nothing. This is what we call a range created candles. We have what we call a range created what? A point of interest. All you have to do is to mark all that range. That was where the real orders was. That was where the market was consolidating before it actually was break a structure. So all you have to do is to what? Is to mark that very particular what? Candles, which I will show you shortly. So if this candle is your point of interest, all you have to do is to mark it out like this, regardless of the color. It can be a green color, it can be a red color, it can be a black color if you have customized your trading view, anything. So mark it out like this and use that particular candle as a what? As an entry. But let's say the candles are like this. Somebody will say, this guy's already teaching me what I know. Don't calm down. These are like, I'm just trying to break down some things down for you so that you will not set yourself up for failure, whatever. So let's say the candles was like this, just candles consolidating like this, small candles. Like, what is this? Where is the last candle? The last candle are all these candles here. The last candle are what? Are all these candles here. So this thing is as the same as for bearish market. Is the same as what? As bearish market. That is why I encourage you to go to my channel, use the playlist, go down to market structure. That is where the foundation of all this English that I'm speaking here was what? Was made. Or just go there. You are going to learn everything about point of interest. It is split different one by one. So why won't you go and watch? So now, since we have understood that the same way this thing can be for a downtrend market, or for a downtrend market. So this is what we call a bullish point of interest for the downtrend market, just an inverse of this, and it's called a what? A bearish point of interest. So now let's try to understand when marking points of interest, what exactly should you be looking at? Is it mitigated levels or unmitigated levels? Calm down. So this is a particular thing for us now. You need to understand when marking points of interest, you should be looking out for unmitigated levels. Are you getting me now? The when you are looking for unmitigated levels, you need to make sure that the unmitigated levels you are looking out for is not a liquidity zone, because I've never mentioned that on my YouTube channel. Let's say this very particular market is pushing to the upside like this, and the next thing, when the markets came back, when the markets broke the very particular high, it came back like this and mitigated the very particular low, and the next thing we saw a push to the upside. So even if he likes, he can have an inducement area like this. So like this now. So then you wanted to mark out the last candle that led to this BOS. Like You wanted to mark out the last candle that led to this BOS. You know, we already have a BOS here. Look at the BOS we have here. So we are edging closer to understand that a particular point of interest you should never be marking. So let's say you are trying to mark out your point of interest. Now you have seen an inducement area, which is this. This is what we call an inducement area. And the next thing now, you are looking for a way to mark your point of interest. And then you saw that the last candle is here. The last candle is somewhere. This is the last candle the market formed before this massive move to the upside. And then you want to mark it out only for you to discover that there's also a last candle here. There's also a last candle here, like this. This last candle, some people that went in for when the market was retracing, these guys, they were here. Let me try to give it a different color. So, and I'll now mark out this one. So this can be another point of interest. And then let's try to mark it like this. Extend it. So sorry, give me some time. Let me try to adjust all these things while I explain it better. Okay, you know, one thing about me is that I take my time to explain my lessons. So I don't care how long you watch the lesson, because you all know that my lesson will always profit you. So if you don't want to watch it to the end, I wonder the one that you always watch to the end. Is it when I attach $100 to it now? That is now when you will now want to watch the lesson. All right, now so let's try to give that candle let's try to give this zone a different color, or like a yellow color. Hey, this one is shouty. Sorry, I'm delaying much, but I'm just trying to explain something here. So this one, this particular candle here was like the previous candle. Let's try to give it a shouty color. This one, oh yeah, give it a new color. Guys, please exercise patience. All these things is to make sure you really understand this very particular stuff. All right, so when you look at this whole thing, you need to remember that when this market break this structure, when this market break this very particular structure, they were, or maybe there was a time you marked out this particular zone, you marked out this zone like this, and then when market was retracing, you were very confident that the market is going to buy from this very particular zone. Then you have extended it, you are waiting for the market. When the market now came tapping, the market moved massively in your favor, and you are smiling, you are very, very happy that you made money, right? And then the market has hit your TP. Now you are now trying to mark another point of interest around this zone, only for you to discover that you still need to mark this candle, and there's no, and as in there's no need for you even to mark out another zone. It is just for you now to extend this one. Let me remove this thing, because as you can see, this thing just look like a straight line. It looks like, just understand something, it looks like a straight line. So there's no even need for you to mark the candle again. The only thing you have to do is remove this thing and extend the previous one you mark, like support and resistance. Very plain. You don't need to even start marking that candle. Why are you extending this thing? Because there's no need. There's no need for you to start stressing yourself. I will call it a stress. But do you know that the moment you do this kind of thing, you have ended up marking a liquidity area? You have ended up what? Marking a liquidity area. And what you just marked out is what? Let me remove this and show you. This is what we call an equal low what? POI. This is what we call what? An equal low POI. As you can see. So why did I call it an equal low POI? This is the POI way that, as in, don't worry, I will get to order flow, you see. But this is the POI that just look very equal. They look what? Very, very, it's not like they will always be that equal, but it will be very, very clear to you that this is an equal. And this is an equal low levels. They are getting me now, or equal high levels. So when you see this kind of thing, my friend, I advise you, there is no need for you to start marking out the particular level. So why is there no need for you to start marking out this level, the particular candle? Is because now one thing that the market is going to do, this thing is very, very funny. These people knows where you want to go in for a buy or for a sell. So they will always come to manipulate that level regardless of any strategy that you are trading. But we intend to refine our things and to get used to what will profit us in the long run, not what will keep breaking our hearts. Are you getting me? It's not like price does not spike in my own zone. It does, but you cannot compare it. As in, this thing, I've backtested this in a lot. Even when I started, I went to the previous year, I started trading forex. I realized that even I was a victim of this thing countless times. And you cannot blame yourself, because they say that these things are like the last candle that led to a BOS. Are you getting me? So there's no need for you to blame yourself. You followed everything, but you need to understand that this is not the right time for you to follow it. This is the wrong time. So when this thing is now coming back like this, they already know. A lot of people are looking out here. This is just like a support level. And you know what price will always do when it comes to a support level. Price will always want to spike. Price will always want to what? Spike. It will want to spike below that low just to grab liquidity. It will still go your way, but it wants us to spike. It wants to. That's normal thing price does during support and resistance thing. Not that that strategy is not profitable, but this is very, very common. You get, so now you can see when price comes, the price might do something like look like this. You're smiling, maybe it's running in your favor. The next thing, then price will not go in your way. So why will price do this kind? It is very, very clear that here is a what? That here is a support level. So price is just dipping into collect liquidities and go your way. Any reasons attached to it, we don't know. But this is what keep on happening. So you don't need to do this kind of thing. Whether this thing is an inverse of it like this, you come to the chart, the market is trending to the upside like this, and then the next thing you saw the market consolidating. Price came, price could not break above this high. The next thing, price drop like this. This is what we call an equal high POI. This will call what? An equal high what? POI. This is a liquidity area. Those chart pattern people call it an equal high. Finish. So you don't need to start marking out another candle here. You don't need to do that. You don't need to what? Do that. Now let me show you something you need to understand here now. You see, if you want to make use of this strategy, there's a way to go in. Now you need to, if it's this strategy you want to be trading, now this is how you can be profiting from it. You need to get used to chart pattern. That's number one thing. Are you getting me? You need to get used to what? Chart pattern. So the moment this kind of thing happens, let's say you came to the chart, price is trending to the upside like this. So you came to the chart, price is trending to the upside like this. You are seeing a series of POS, you are happy, price in uptrend market. Next thing price retrace, you bought again. And then price came up, like price pulled up, and price could not break this high. Price could not break this high. The next thing you started seeing some checkmates, like series of small candles forming. We were like, what is going on? The next thing you see a hammer candle. My friend, you see that hammer candle you see, there's a higher tendency that the trend wants to reverse. The kind of reverse that trend want to do here is what we call and what? A failed swing high. A what? A failed swing high. So that failed swing high is you can still call it an equal high. You can still call it what? An equal high. The next thing now you see price will now break below. Like this. Are you getting? So if you want to enter, you just need to get used to. You see all this bullish and bearish engulfing. The moment all those checkmate is forming, calm down. The next thing, if you see a hammer candle or you see a bearish candle here, now start selling. Start what? Start selling. You intend to go into the market very early with a strategy called what? Equal high. With a strategy called what? Equal high or failed swing high. Are you getting me now? So I really explained that on the market structure VIP lesson on the YouTube. So just go and watch it. I explained that there. But you can equally learn more of these in the VIP class, because I know that with you learning, you will want to spot this thing countless times, or you want somebody that can help you master this thing very, very well. Use the number on the screen. This thing will be very, very easy for you to master. Okay, so I'm not assuring that you're not going to lose. Oh. Number one is that you're going to lose, but you can never compare your losing to your what? To your profit. That's not one thing about me. Okay, so now looking at this thing, this is what we mean by what? Equal high POI. It can still be same for what? For a downtrend market. Now, I believe that I've taken almost 18 minutes of my time to explain all these things. Now, let me take you straight to the chart. Then maybe we could spot more of the. But before we go to the chart, let me try to show you the difference between an equal high POI and order flow, and why as a trader you need to get used to order flow than equal high POIs. Do you get me now? You need to get used to what? Order flow than equal high. The moment you see equal high, don't use it. Just calm down. Wait for price to create some orders there, because those things are liquidity area. Or better, so you can wait for the spike before you now know what to do next. Maybe you can look out for change of character around that very particular zone. So when we consider what we mean by order flow works like this. Let's say that price is trending to the downside, price break is structured like this. Look at the origin of this BOS, or look at the origin of all this massive sell is here. This is the origin of it, that you see all this sell. This is the origin. Here is the what? Origin of that very particular cell. Let me keep this thing like this. I want to explain this thing in a way that you understand. This is the origin. It is what from here that price actually sold massively to the downside. So this is the origin of it, and this is where the real order is what? Resting. So let's remove this thing. It has done its work, and then price came up a little, and the next thing now price started dropping to the downside. So if price does something that look like this is what we call by what? This is an inducement. This is what an inducement. What type of an inducement is here? This is what we mean by equal high inducement. So you don't need to use this kind of thing. You don't need to what? To use this kind of POI. This is what we mean by what? Equal high inducement area. You don't even need to look at the particular level, because the next thing is that it is still a failed retracement level. It could not get to the real level. So this is the unmitigated level, which is the candle here. Look at the where the last candle form is here. So this is like the way the real liquidity is resting. So the next thing now, the next thing that price will do is that price will want to come back to rebalance that very particular what POI. The moment price rebalance that POI like this, it will now start dropping to the downside. Are you getting me now? So this is what we mean by what point of interest that has been mitigated. Now the next unmitigated level, maybe you spotted a candle here like this. You can see that candle. Let's say the candle is here, and the previous candle, let me try to give it a different color so that you get this thing I'm saying very, very well. So let's give it a green color. And then the previous candle was here. The previous candle was here. Are you getting that? This was where the previous candle, let me be locking all these things. This was where the previous candle was. So this zone has been mitigated by this candle. It has already been rebalanced by this candle. And you can see this is not an equal high. This is not what? An equal high. Now, the next thing for you to do is to mark this particular candle. That was the last candle here. Mark it out like this. So you can see it's just like you doing a building blocks. Like when we were small, we did some building blocks, all those kind of things. So you see this kind of stuff. Now, this is what we mean by what? Order flow. This is not as the same as this. You can see this order was a little bit below the particular one. You can see the next thing price will do is that price will come back like this. I will show you all these things on the chart. Let's remove this thing now. So the next thing, let's remove. Now, price has already mitigated this very particular level. Price has already what? Mitigate this particular level. So this level is automatically what? Useless. There's no need for you to start marking this very particular level, because the moment you start marking this very particular level again, that means you are just, number one is that you are likely to miss out on that setup. Once you start extending this particular candle again, once you start extending this zone again like this, that means number one, you are likely to miss out on that very particular setup, or you are most likely to do this thing like market might come there and spike above your zone, something that look like that. Okay, so what you have to do is to look at the last candle. It must look like this, and then you mark it like this. So this is what we mean by what? Order flow. This is what we mean by what? A bearish order flow. This is what we mean by what? A bearish order flow. Let me show you straight where this thing form on the chart. So this is what we mean by what? Bearish order flow, and this is what we mean by equal high. Where is that thing? This one, the what? Equal high. You can see you can never compare this thing. This is just like a straight line. Why this one is what? Why this one is like this? Look at it here. So this is what we mean by what? A bearish order flow. The same way it is applicable for a uptrend market. The same way is the what is applicable for an uptrend market. You can see how I'm splitting this thing. I don't want the video to be long. So now let me show you straight away where all this thing form on the chart. So now let's see now. So when we consider order flow, or when we even want to consider a valid point of interest, number one is that a valid point of interest must break a structure. That's number one rule. It must what? It must break a structure. Look at it. It must break a, for you to mark out a point of interest, it must break a structure. That's number one thing. The second thing is that it must have an inducement level. It must what? Have an, after the break, you need to see a failed retracement. Are you getting me now? You need to see a failed retracement like this. So the moment you see that failed retracement, now proceed. Maybe if you spot a clear liquidity, it will be more additional confident that that particular setup will play. Are you getting me now? But once you have seen a clear liquidity, that means that point of interest is likely to hold. The next thing you have to look out for a fair value gap. If you don't know what is the fair value gap, or you don't understand what I mean by inducement and every, or like clear of liquidity I've said, go to my SMC PDF here. Come down to my market structure lesson, go down to the SMC tutorial. These things are there. It will help you to understand. Okay, so now this is it. I'm just trying to take you straight to the charts before we see all these things. Okay, so now look at this thing now. So this is what we mean by what? Inducement. This is what we mean by inducement. So you make sure that your point of interest break a structure. Overall, mandatory, everything must. It must break a structure. If that point of interest did not break any structure, whether it is internal or external, it must break one. If it did not break any one, you are just setting yourself up for failure. The next thing is that you need to have an inducement area like this. Next, you need to have a fair value gap. You need to show you a displacement of candle. Okay, you need to show you what a displacement of candle. I have done that on my SMC lesson. You can go and check it out. Then the next thing now, you will now proceed in marking out your point of interest. If there's any clear liquidity, that is additional confidence that that very particular setup will play. Okay, so now let's now proceed to even understand the difference between equal high POI and what and clear of liquidity. So when you must have seen that this thing played out like this now, this thing went aggressively to the upside. This one by what equal high. This one by what equal high. For you to know that this is a clear liquidity, you need to see a wick as in like this. Sorry, let me keep it this way. Let's try to grab this one. So you need to see price that will spike below this particular level. It must happen with a wick. It must what happen with a wick. It must happen with a wick. It will not have to happen with a full body candle. Take note of that. Once price spike below that particular zone, it can be any candle, but you need to happen with a wick, and from there price will push aggressively to the upside. You can see how I'm rushing this phase, but it's already on my SMC lesson. Okay, so you can go and watch it. Now let's go to the chart and see where all these things are being spotted on the chart. Okay, so now let's look at this now. So this is GDP USD. This is GDP USD now. This is GDP USD here. First of all, you are going to see how order flows look like, and you see how profitable an order flow can be. Okay, now you see an order flow will also be, and you will see that whenever you are mostly looking for order flows, you will end up marking out unmitigated levels. Are you getting me now? But when you start marking out equal highs or equal low POI, you will end up marking something that look like a support and resistance. God, it will now look more difficult for you when you don't even understand support and resistance. At the end of the whole day, you might be struggling with it. Okay, so why don't you try to use this market structure strategy, and then at the end of the whole day follow this order flow? You will be very, very profitable. Now when you look at what really happened here on GDP USD, price consolidated here, but we can see a new high. Price printed a new high, and you can see this has been selling. Now price printed a new high, price printed a new low. First thing, price came here and consolidated around this level. The next thing, price gave a little retracement and pushed to the upside, breaking this high. Now let's remove this thing. Look at the high price break. Now, the moment price broke this high, this is what we call what a change of character. This is what we call what a change of character. So what is really expected of you to do is to mark out the last candle that led to that BOS. Where is the last candle? Look at the last candle here. This was the last candle. This was the last candle that led to this BOS. As you can see, when price came up, price consolidated here. Price was consolidated here. And the next thing, after this candle form, price pushed aggressively and broke a structure. Now, as you can see how price came back, mitigate that candle and push massively to the upside. Now look at a point of interest here again. You see these candles here, see these range candles here, look at it. You can see these candles here alongside this massive bullish engulfing. This is the next point of interest. As price push massively to the upside, we don't really have any business with this. As price retrace, we mark here as our equal low inducement. Let me remove this in. We mark here as our what? As our equal low what? Inducement. As you can see, this is what we mean by what? Equal low inducement. Can you see now? This one by what? Equal low inducement. Can you see how this thing looks so equal? Now, the next thing now, you can see price was buying. Now you could be blaming yourself. What kind of I've missed? You have not missed out on anything. So see how price bought massively to the upside. Now maybe you start marking out this zone. The next thing now you tell yourself is that I have this zone. I have this. Once this zone fell, I'll buy from this zone. Look at yourself. Just look at what you're telling. And at the end of the whole day now, you might not be able to withstand the loss. Maybe when the market will now hit your SL, you will now start looking for a way to revenge. Why are you doing those kind of things? So this will be what equal low inducement. I can see this is like a perfect definition of what I was explaining on that diagram. As you can see that candle here. You can see that candle. See how that candle is as equal as this. And when you extend it, there's no difference. There's no difference of you marking out support and resistance here. Okay, so now let's remove this thing. So now this is one that equal low inducement. See how price came, price mitigated it, gave you little profit, you are smiling. The next thing, price took you out and went your direction. So because when price tag you out, price tap into that very particular mitigated level. Look at the first order, see the second order. Can you see how the orders are paired upon the second ones? So this means what? Order flow. This is what order flow. So as price bought massively again, try to get back to that candle. It could not, and then we could see massive buy. The next thing, price still came back, mitigated it. Can you see how it looks like here? Look at the first order, look at the second order, look at the third orders, and the candles are not the same. Look at where the last candle formed here. Look at where the last candle formed here. And the second last candle here formed above that very particular POI. Formed above what? That very particular POI. It is just like it is greater than the previous candle. It is what? It is greater than what? This very particular previous candle. Just look at it from here. Look at it from look at the previous last candle here. Now look at the previous last candle. You can see, even if you keep it like this, you can see it is greater than it. Can you get me now? So this is one way what order flow. Order flow is a very profitable strategy that you should pay very attention in on understanding how it works. So you see how price again. Now you can see when price tapping again, price bought massively, gave you a change of character again. Now see how price came back again, mitigate that candle and push massively to the upside. This is where a clean order flow actually what happened. Can see this is how a clean order flow work. If your point of interest is not looking like this, just know that you are setting yourself up for failure. Now look at it again. Can see when price sold, change of character, price came, tested it, and then sold massively again. Another BOS, as I said, the price must give a BOS, inducement, and the rest of them. See how price mitigated it, sold massively again. There was even an initial order that was here, but this one you only see it on a lower time frame like this. This is a range created candles here. What they actually did was they break an internal structure here. You can see they break after this internal structure. Price came, consolidated here. Here will serve as an inducement level. Here will serve as an inducement level. And see, and the next same price now pushed up and mitigated that zone and sold massively to the downside. As you can see, price sold massively to the downside. So now this was the signal I gave to the VIP community. Now look at how I was able to read that signal. Look at when I dropped that signal on GDP USD, not only on the VIP community, I also dropped the signal here on the free Telegram community as well. So you see, I do, or I teach you what I do. Like I teach you what I practice, not what I don't do. Okay, so look at it. You see when I did the signal, there were two of them, and then I gave them reasons why the first setup will not, why will not take the first setup. Now let me show you. Now look at it here. All right, this is not it. So now look at when I gave that very particular signal. This is the free Telegram community. Oh, this is like the one of the signals I gave. Go there, you see many of it. Now looking at this thing now, I told them that price need to break this low. Price need to what? Break this low before we can know that what that this POI we hold. Because at the moment, what we can see here is what we call an equal low POI. You can see this one was an equal low POI. So what price did was this. When price came back to that POI, see what price did. When price came back to that POI, price did not break that very particular low. It did not break the low. You can see it did not break the low, and I did not take that setup. Since it did not break that low, I did not take it. Now, that was why price came and spiked above that zone and still went away. It even went on and hit our TP. So I then told them that the next thing is for us to start looking for the extreme level. The next thing for us was to start looking for the extreme level. At this time, we have the extreme POI to wait for sell. So look at when the price came back to that extreme POI. So look at it. Look at when price came back to that very particular extreme POI. After price hit our TP on the very particular setup, you can see, look at the equal low POI. Now see how price went massively and mitigated the previous high, and then that is the extreme I said, and dropped massively to the downside. Then look at that extreme POI here. Look at that extreme POI. You can see this is that extreme POI. As price pushed massively, it mitigated it and dropped massively to the downside. Can you see? And hit our TP. So even looking at from here, we even have a clean order flow. That was even the main reason I was looking at a particular level. When I spotted this, the market mitigated this level. Number one, here has been mitigated, now followed by here. This particular level, this was the last candle, and as you can see, it has been mitigated. So this was like the order flow I spotted that gave me confidence that this particular POI here, look at it, that gave me confidence that this POI will actually hold. But on one condition, I told them that this POI here, this sell we have here must actually sell and break this low before we will now know that the POI here will hold. But that thing did not happen. Instead, price was pushed up instead. Price respected the equal low guys and then pushed up and then hit our SL, though we did not take it because the criteria did not meet. Okay, and then went our direction. Now, this was when some of my students made some mistakes. Now, some of them, we are marking out this candle here. We are marking this particular candle here as a point of interest. Now, they were marking out the particular candle. Where was that candle? Actually, I think that candle was somewhere around here, something like this. This was that candle, I believe. Not really, something from. So they were actually trying to mark this very particular candle. So some of them actually, I believe it was one or two of them, because this thing, you need somebody that will keep on helping you whenever you are doing the wrong thing. That's why you need UCR. UCR will always be there. He will assist you. Okay, this thing you do is wrong. If you go to my to the community, you will see how I normally correct these guys. You have to drop your signals, drop all your signals, drop all your setup. I will always be there to assist you. So you can see this is how they normally drop their signals. Do you know, no matter the number of people here, I still go as far as breaking down all their signals one by one. Don't know why this network is delaying. So you can see this one has already dropped his own signal. Has already dropped what he intended to do the particular week, and what is now left for me is to go and check all these things and give him my corrections. You can see this one's own, and you can see the person I'm already correcting here. And this is it. These are like the new students that I'm already assisting. So you can see this guy as well. I am also correcting all his signals, trying to help him understand one or two things. He has already posted his signal here, and then this is me sharing my view. So this is the kind of mentor you need. It's not the one that will call you on Zoom calls, all this and this. So please find a way, use the number. I will help you massively. It's not like I'm even trying to convince you. It's left for you. If you have lost money, well, just use the number here on the screen and then join our academy. Okay, so now let's go back. So they were actually marking this very particular POI, and this POI gave everything. This POI actually gave a BOS. This POI gave a BOS like this, and then even this POI gave an inducement level, an equal low inducement level for that matter. It still gave a fair value gap. Now, this was when most of them was having issue. So they marked that. I said, see here, this is an equal low. We know this inducement is an equal low, but this POI as well is what is an equal low. There is no difference between the support and resistance guys and you. Look at it. This will mean that what support and resistance. Are you getting me? I'm not a support and resistance trader, but I'm telling you the real fact that this will be what a support level, and price has tested this level for several levels, for several times. As you can see, price push up, test it again, push up again, test it. So like it's like a key level that price has been rejecting, and you think that the next one that price might not spike below it when he has seen that a lot of others is resting below, and that is why you see why price came, spiked below it, and went there. Wait, you see that kind of thing. So this is what I mean by what you're marking equal low. It is very, very what bad. Don't do that, bro. Don't do that. So now you can see another order flow printing. This other flow, this another signal. And first thing on Monday, I'll be sharing this particular signal on the free Telegram community, even on the VIP community as well. I will enter it live. I'm not scared of anything, bro. This is our inducement. This is our what? Our point of interest. Let me show you one more place this thing works so that it is not late for you to go back and start what's analyzing all this two thing. Okay, so you can see the video is not becoming too long, bro. It's not becoming too long, but there's no problem. Everything just to make sure you understand. Okay, I'm doing my best just to make sure you understand. Now look at this POI. Look at this POI that is here. So first thing, we had the massive buy to the upside. We had this BOS here. We had this very particular BOS. You can see. Please, if you enjoyed the lesson, try and subscribe, share the lesson. I'm begging you, just share. I'm just begging you, try and share. Okay, so this is what we mean by equal low POI. We have equal highs as well. So this is equal low POI, and you can see, even if you like, extend it. So that was the reason why price came, spiked below your zone, and still went your direction. So please, you don't really need to be doing those kind of thing. Whenever the market gives you that kind of stuff, please just go and find out that setup. So I believe like this lesson has been helpful. It has really helped you. It has really helped you to understand this whole thing. And that is why you just have to please subscribe, okay? And also find a way and join the free Telegram community, equally the academy as well. You can see equal high and see how price has already spiked above it. Price has grabbed liquidity. So that is what we mean by what equal. Look at another equal high here again. Equal high. The one thing about this particular equal high is that there's always a long-term buy side or sell side liquidity. Are you getting me now? So see how price came, spiked below it, collected it. There was no need. Why are you looking at these levels, bro? That was the reason why price spike went your way. So, all right, so this is where I'm going to end the lesson. I believe you really enjoyed or understood what I did on today's lesson. Please like and subscribe to the YouTube channel. Share the lesson, share to your friends, help somebody so that that very particular person would not be doing this very particular mistake. If there's anything you have as a suggestion that you want me to look into, try and drop it on the comment section. I'll always be there to assist you and to for us to actually change ideas, okay? To look into what you actually have or what you are trying to enable me to understand. Okay, so from here we'll end the lesson. Thank you and may God bless you.